All right, here I am again talking about Alibaba up 17% over the past month. And since its lows of under $140, it's up by 26%. So, what a move in a company that's valued hundreds of billions of dollars. It takes quite a lot of money to go into Alibaba to move this by so much. Still a relatively cheap stock considering it has double-digit growth. And like I say, the investor who is patient is often the one that's most rewarded. So we're going to be talking about this bullish move, but I think this is only the beginning of the bull run in Alibaba, and I'll discuss my reasons why, backed by historical context as well as new news from the Chinese Communist Party. So welcome back to another video. My name is Adam, and if you know anything about the channel, you know that I'm a big investor in Alibaba. Right now, my position is still not doing incredibly well. As you can see here in my main account, I have 10 shares. Average cost was $241. Obviously, the current price is $117.18. And right now I'm down 26%. So it would have to have another pretty big rally for me just to break even, but I'm not looking to break even on Alibaba stock. I love the price at $241. So I really like it at $177. And during my Wealthsimple account, as you can see, my crypto portfolio is actually doing way better than my position in Alibaba. It's actually outperforming by quite a bit. I'm up 112%, $842, and I'm up 4% on my stocks just in my Wealthsimple. So in my Wealthsimple, I also have a few more Alibaba shares. I'm down only 6% on those, as you can see, all-time performance. So I have 4 shares, so 14 shares total. And I mean, that is not a lot to many people, but to me, that's quite a bit of money. Okay, I'm only 23, so I don't have a lot of money to invest. I'm also still a student. And so, yeah, I'm down 6% here. And my average cost was $189. So if anything, I should just like average down even more on Alibaba. So yeah, down 6% there. And on Baidu, I'm actually now making a little bit of money. I have 4 shares worth $723 in total, up 2% there. So those are my Chinese stocks. Plus I have TAL, all the way down here, still down 31%. That was just kind of like a bet. But again, I only invested $49, so not too much of a loss there. That was more of just like a swing play, and it didn't work out too well. But I'm just gonna hold. And this is a Chinese education stock. But overall, I'm up on my portfolio. And so if you'd like to see my real-time buys and sells, feel free to check out the Discord link down below, as well as Patreon. You can get my real-time buys and sells for just $5 a month. But I mean, check out the Discord. It's totally free, and we talk about Chinese stocks, everything like that with on there. So it's a pretty fast-growing community. So yeah, I'd really appreciate it if you checked it out. Also, subscribe to the channel and like the video if you enjoy it. But let's go back to Alibaba. Again, right now, this is a relatively cheap stock sitting at under $200. And what I mean by that is if you look at the 6-month chart, it's been down 22% despite this 26% move up since its lows. The 52-week low was $138. Year to date, it's down by 22%. Over the past 1 year, it's down by 42%. Okay, so it hurts if you bought it at the highs. And some people would also speculate that when it was at $300, it was also grossly undervalued. So down 42% just over this past year, giving it a price to sales ratio right now of trailing 12 months of 21. And we're going to look at the analyst estimates and all the sales growth, stuff like that in this video as well. So if you're looking at the quarterly result, it's kind of all over the place. One, because they were fined as being like anti-competitive or monopolistic. And so they were levied a huge fine in Q1 of 2021, which means they had negative earnings, but a lot of the earnings that they are earning is going straight back into the business. They're buying a few shares, which is kind of like a form of a dividend, like a share buyback, reduces the overall float, which basically increases shareholder value because you have fewer shares in less hands, basically. So analysts' average estimate is $243, which shows a significant upside from the $177 it is priced at today. Again, that's like a 26% move, 25% move. So, I mean, average rating here from analysts is a buy/strong buy. Very few say sell, and very few say underperform or just hold. So if analyst expectations mean anything to you, there it is. I mean, on top of that, we see like a forward PE of 19. So they're expected to grow faster in the next 12 months relative to the past 12 months. And I mean, 19 for a company like Alibaba, which is like the Amazon of China, except a bit more. They own so much. It's not only sort of like an e-commerce giant like Amazon is, but I mean, it owns its own like sort of form of AWS, like Amazon Web Services. You have basically the Alibaba version of that. They also own their own magazine company. So it's like an everything type holding company. It has its own marketplace, its own financial segment, Ant Group, which the IPO got axed. But it seems like there's a number of bullish points that's, kind of reversing this trend of 42% in the past year. And I mean, we've seen this before. If you look at the 5-year chart, we've seen that it went from $208 in 2018 down by 36% from June to December of 2018. Okay. And what did it do since then? It kind of went up by a lot. Then it kind of went down, but then it just, sort of always recovered. And here there was increasing tensions between US and China. It kind of recovered. And then, it just keeps going like that. So this move right here is a 53% move downwards. So it was definitely an oversold territory for way too long. And I mean, I started buying when it was at $230 right here, and I kept on buying, and I think I will be rewarded. I think that this might just be the start of a big turnaround play in Alibaba. So yeah, we already went over the forward PE, saying how it's still incredibly cheap. Something like an Amazon trades at, I think, a 30 or 40 forward PE. Current growth for 2022 or for next year is 27%, which is like ridiculous. This is a lot of growth for a company that's producing like 100 billion worth of revenue, okay, based off of 45 analyst estimates. And 2023 is expected to grow at 20% year over year revenue, which is still ridiculous. Like anything above or close to 20% is just insane growth for a price to sales ratio of 20. And if we're just looking at the candlesticks and looking at the Bollinger Bands, of course, we can see over the past year to date, it's just been absolutely slaughtered from $220 all the way to under 140 even before sort of rising back up. But again, as the stock can sort of ride the lower Bollinger Band, so too can the stock go up and ride the upper Bollinger Band for a long time, just depending on, one, like the current news that's out on the market, which we're going to talk about in a second, but also just if the stock has been beaten down for so long by so much, a good recovery play could show Alibaba crossing the 200 level and then potentially further on. But I would say the next resistance would be at around the 200 level because that's where it's sort of stabilized before moving downwards. So I am a strong believer in looking at the technicals, but I think for a stock like Alibaba, you got to look at the fundamentals first and foremost. And even though it's riding the upper Bollinger Band, $177 is just an absolute steal for this stock. And I mean, another idea to say that you should be patient with stocks is this buddy sold Baba when it fell to 138 and took a 50% loss. I borrowed to fund it, and now I have a huge debt. My wife doesn't know. Any suggestions would be great. So I mean, who knows if buddy is actually true? But it's tough. This just shows like if you're down by so much, you need to believe in the company to keep on holding. Okay, it takes balls of steel in order to not sell, right? And I mean, I feel really, really bad for this guy. But I mean, at the end of the day, you got to trust your investments. And Alibaba is a great company. I believe the China crackdown won't last forever. So tell her you wear the pants in the family. I guess the wife now wears the pants. But holy shit, that's tough for that guy. So yeah, the first one of why we've seen the rise in Chinese stocks in general was Hong Kong stocks rise fastest in world as crackdown concerns ebb. So if we know the president, Xi Jinping, had a regulatory crackdown on everything, on internet stocks to video games. He restricted video gaming in children to like an hour per night or something like that. He made tutoring companies that were for-profit, non-profit organizations. So that's why TAL stock was down by, I mean, you look at even the 6-month trend by 92% in the past 6 months, just because there's a one huge move of 70% in one day that basically made TAL basically become a non-profit organization in the span of like one day. So let's just read what this has to say. So there's a growing consensus among analysts and traders that Xi's campaigns to rein in dominant industry players has turned China's beaten down offshore stocks into bargains. basically rated the weight shares to overweight from underweight, saying that tighter economic policy and regulatory concerns are priced in. And so earlier this month, that Chinese stocks offered deep value opportunities. And that's why Charlie Munger has doubled down on Alibaba, and investors are following suit. So basically, Munger is the chairman of the Daily Journal and holds 3% of the company's shares. And most of the money in the Daily Journal is on Alibaba. And they stated that they increased their position by 86% in one quarter when the stock was getting beaten down like an absolute dog, as we can see over here. So yeah. And he started buying at the 230, 240 range. So he definitely loves it at the $177 range, even right now. Yeah, it's, talk about value stocks. Charlie Munger, Warren Buffett are fans of value stocks. Alibaba is a growth value stock, in my opinion. It's time to accumulate more technology stocks, said an asset manager director at Amber Hill Capital. It's getting clearer and clearer that the worst of Beijing's crackdown are behind us, in particular the tech sector, as they were the first to suffer. This also isn't contrary to something like ARK Invest's Cathie Woods. She limited their exposure of their funds to Chinese stocks, Baidu and Alibaba, because of the growing concerns that Xi was basically going to cut down everything that the competitive advantage that Alibaba had, right? You look at how Alibaba tracks user data, much like Amazon. Now, apparently, that data is going to be available to the Communist Party, obviously because they want to control more of the population, or at least that's probably their understated aim. So yeah, the sell-off was incredibly extreme, and I mean, again, it hurts, right? Like when you invest in stocks and when you're trying to pick winners, sometimes it hurts and sometimes it backfires. But again, this just shows you do have to hold to your position and you buy the dip, basically, if you have a big conviction on certain stocks, right? And I mean, if you don't have the balls for that, invest in an index fund, right? Invest in an index fund and you won't get hurt like this. I mean, I'm still down 26% and 6% on my position in my two different portfolios, but I'm just like, I'm comfortable with that. So yeah, we've become more optimistic on Hong Kong stocks in the fourth quarter, et cetera, et cetera. So yeah, on top of that, there's the return of Jack Ma, and Alibaba shares surge on Jack Ma Travel, even though that Jack Ma, he was the co-founder of Alibaba, but he stepped down as CEO a couple of years ago. And on top of that, he also isn't even on the executive chairman board. But Jack Ma is really seen as being intertwined with the company. He said some pretty provocative things to the Communist Party about basically the financial district being sort of like a bunch of what did he say? Like a bunch of brokerage pawns just running around. So basically, there's news that he has emerged. He was sort of in lockdown for quite some time. Wasn't seen publicly for a while. Even after he was seen publicly, he didn't leave China. And now he's outside of China. Reportedly, he's in Spain after traveling to Hong Kong. This is according to the South China Morning Post, which is actually owned by Alibaba. And this was giving a bigger lift to shares in the pre-market. So again, yeah, blah, blah, blah. So yeah, it's good to see that Jack Ma is back and he's thought to be really intertwined with the company. So he's not even the CEO, and he hasn't been the CEO in years. He's not even been the executive chairman. He resigned 2 years ago. So again, obviously investors are desperate for some news, but I think it is important that the spokesperson for Alibaba has reemerged. This could again mean that there's a thawing in the tensions between what Xi wants to do with the tech companies. So yeah, overall, just know that if you think a stock is very cheap and you have a high conviction and you've done your due diligence, just keep holding strong, all right? Why would you sell? Just keep buying more shares, especially if you know it's a good company. And it's the same pattern over and over again. It's like market psychology. When the stock is doing well, you're gonna be like, oh, like the stock's gonna be doing well forever. Like don't sell, blah, blah, blah. But then when a stock is and then the stock ends up doing poorly. But then when the stock is doing poorly, everyone's like, oh, like the stock is going to go bankrupt. It's never going to do well. That's what you read on all of the posts. and the stock ends up doing very well. So yeah, let me know what you think of this video. I'm a big fan of Alibaba. I've been talking about it for like at least a year now. So let me know what you think down below in the comments. I'd appreciate a thumbs up and subscribe if you haven't already. Take care. Love you all and peace. Check out my Instagram as well as my TikTok, which is all down below in the link, especially the Discord. But yeah, cheers, guys.